Alrighty, good afternoon. Welcome to Trader Minute. Great to have you aboard. Um, Want to talk a couple things in regards to candles and candle patterns here. Give you a couple numbers here. Uh, was asked what my favorite candlestick pattern is. My favorite candlestick pattern to trade is, and I don't know that I've made it that much secret. My favorite candlestick pattern to trade is a bearish engulfing. Hands down, a bearish engulfing. Why? Why is it my favorite to trade? Because depending on what study you read or look at, it's accurate at a 79 to 80% ratio. That's tremendous accuracy. 79 to 80% of the time, a bearish engulfing. One of these here on Intel. Let me zoom in here. Okay, one of these things here on Intel back a little while ago. Bearish engulfing. 79 to 80% of the time, you will see the stock drop. Okay? So it's by far my favorite. My favorite. Now you think, okay, well, a bullish engulfing, you'll have similar accuracy. Well, no. Take a look at this bullish engulfing right here. Okay, bullish engulfings are only accurate between 67 and 69% of the time. Okay, what's the discrepancy with the accuracy? Well, the market conditions, right? A bearish engulfing isn't going to be as accurate in a bullish market, and a bullish engulfing isn't going to be as accurate in a bearish market. That's one of the reasons why this year we've not seen the bearish engulfings be nearly as accurate as they have been in the past. Okay? But it is my favorite simply because of that accuracy factor. Okay? Now you compare it to the candlestick pattern I'm going to show you here today that has a 52% accuracy. Okay, and you say, well, okay, do I really want to trade this pattern since it's just not very accurate? I mean, 52%. I mean, flip a coin, right? But in general, these bearish engulfings are some of the most accurate. These dark clouds are also more accurate, and also in general, bearish candlestick patterns are more accurate than bullish patterns. Okay? They tend to be more accurate than bullish patterns. So, just for whatever that's worth. Let's go take a look here at one of the patterns that's setting up out there. And, in Goldman Sachs here. And let me zoom in here for you. And let's draw this. Okay. So there's this pattern out there called a tristar. And a tristar typically, excuse me, sorry, I'm learning how to use this zoom function here. All right, and it's not working real well for me. So let me just click annotate here. And a tristar pattern typically looks like this. It will have an upward trend. Okay, the stock will have an upward trend, and a tristar is a reversal pattern with 3 stars. Okay, what's a star? A doji star candle? Well, it looks something like this, with a very small body and short legs, okay, or short wicks on the candlestick. So this would be kind of a tristar look right here, where we have the upward trend. We have a star candle, a doji star showing some indecision. Next day, a gap up with a star. The next day, a gap down with a star. And the theory behind this is that you get a reversal to the downside on it. Okay. Well, you can also have a bullish tristar pattern, which is just the opposite. Okay, which is just the exact opposite. You basically have a stock that's falling. Then you get a star pattern, okay? Then you get another star on a gap down. Then you get a star on a gap up, and you would expect to see some sort of upward trend after that, okay? Let me zoom that in so you can kind of see the pattern a little better. Okay, but that's kind of your tristar pattern here. Okay? Like I said, you're about 52% accurate with this pattern. Okay, playing it as a true reversal. Playing it as a true reversal. So it's not a pattern that I look at and I say, you know what? I'm going to go look for tristar's because, man, those are going to work for me and I'm going to be able to do real well with the tristar. Okay. No, it doesn't really work that way. And in fact, if you're playing a bearish tristar pattern on a stock that's ripping higher, yeah, you may be right for one day, but chances are the trend's going to catch up and take it higher. And if you're playing a tristar on the downside, chances are the trend's going to catch up and actually take it lower. Okay. So why talk about them? Well, because we're seeing some in the market. Okay, and we're seeing two different kinds. And let's go take a look here at Boeing. Yeah, let's go look at Boeing. And Boeing, while it doesn't have a tristar anymore, this morning for a short time had kind of a tristar. Now you'll notice this isn't picture perfect. We have a little bit more of a body on Friday than what we would expect on a tristar. Okay, we kind of have a smaller body, or we don't have the true star, but we have a small body, and that's kind of the principle here. A small body. Then we get a gap up Monday with a small body, and then today a gap down. And let's just assume Boeing closes where it opened today. Let's say it sells off 50 cents into the close, and it closes where it opens. Well, we would have a tristar pattern. And there's no way I would go and play it. There's no way I would go buy puts on Boeing given the tristar pattern. Very similar to back here. Let me zoom this in. Okay, let's see here. We have a little bit of a tristar pattern going on right here, where we have the spinning doji star. The next day, not a true star, but the next day a star. We have this tristar pattern. It doesn't really work out that well. Okay, the trend tends to kind of take over with it. And same for bottom tristar's. I mean, you could argue we have a little bit of a bullish tristar action right over here, maybe. Okay, sorry. See, there we go. We have some bullish tristar action. These bodies are a little bit too big. And, okay, it's not picture perfect, but the bullish tristar is going to work really well. Why? Because the stock's in an upward trend. Okay, the overall trend here with it. So when do tristar's actually increase in accuracy? I mean, I wouldn't do it here with Boeing, right? I mean, I wouldn't go near it. We have some tristar potential in some other stocks out there, and happening from severely overbought situations. Okay. But the tristar's will actually increase in accuracy if played on some sort of bounce. What do I mean? Well, take Goldman Sachs. Okay? Take Goldman Sachs. The overall trend on Goldman has been higher. Okay, we've seen it higher here. But recently we had a big slide here in Goldman from 170 down to 154. Then we've had a little bit of a rally. And what have we done? We've retraced the sell-off from September and early October. Okay. Well, now what do we have? Well, we have some tristar action. Not a true tristar, as we have a little bit bigger wick yesterday as it kind of exaggerated, or a little bit bigger body yesterday as it exaggerated at the close. But we have a tristar action. When tristars happen within retracements, their accuracy goes up. Depending on which source or you're testing, between 60 and 65%. So not nearly as accurate as a bearish engulfing, but still accurate enough to set up a trade. Okay. So here we don't have a Boeing-like trend. Here we don't have a Starbucks-like trend. Here we have a stock that had a real hard sell, has had a small uptick as the market has gone and ripped into new highs, Goldman's been underperforming the market. Market may look a little toppy. All right, I want to play a little toppiness in the market. Here now I have a tristar on Goldman. All right, I can look to play that next move lower here. Where's the stop? Well, the stop in theory is right up here above 163.5, yesterday's close. That's the theoretical stop. But typically when I'm playing a tristar, it's something that can go into a consolidation mode very quickly because of all the indecision. Yeah, as you mentioned, one T, yeah, all the indecision there. So because of all that indecision, there's a good chance that we just consolidate. And if we just consolidate, I'm just stuck in a trade. So instead of using the high and saying, you know what, if it breaks above the high of the tristar pattern, I get out, I like to use the high from the third star. So for Goldman, if I were to enter Goldman puts here today, I would use today's high as the stopping point. Okay, what does that do? I either am out with a very small loss quickly, barring any major gap, or I got something moving my way fast. And for a candlestick pattern, that's what I would like. So for Goldman, that's kind of the setup that we are seeing here with this bearish tristar. Again, not nearly as accurate as some of the engulfing patterns, okay, but when you're trading the tristar within the intermediate trend or reversing it or near a retracement area, you're going to have a lot greater accuracy with that pattern. Okay, let's take a look here at Chevron. Okay, here's Chevron. While not a true tristar, and finding true tristar's, they're just pretty rare to find the picture perfect tristar. Okay, but the principles all kind of work. Okay, but while we don't have a true tristar here, we have some of the principles. We have a kind of a shorter body here, and we have the gap up, short body. And then, if we had gap down, we would have tristar, but it didn't gap down. It just went down pretty quick. But we have that kind of similar type of reversal pattern. Notice where it's happening. It's happening within the retracement of this strong down move. Okay, so the chances of this being accurate are much greater than for something like Boeing or a tristar that would happen up near a top like this back here. Okay. So, with Goldman, we have a tristar action that is actually tradable, while we're seeing tristars coming in other groups, and, they could be erased pretty quickly here today. They're not nearly as tradable because they are going so much counter trend. And if you're going counter trend, you really want some engulfings or dark clouds or some of the more accurate candlestick patterns than what a tristar itself is. Okay? But a tristar can be quite tradable. Especially in the case of something like Goldman Sachs, they can really help to spot some of these reversal points at retracements and say, hey, you know what? We've retraced. We're ready to go, and they give you a great stopping point. So, if we were to enter into Goldman here at the close, 161.78. Okay, we short Goldman at 161.78. Our stop's at 162.35. So we have about 55-60 cent risk, barring a gap, right? But we don't have a whole lot of risk here. If Goldman does pull back, if the tristar does mark that bottom, okay, well, how far is it going to pull back? Well, with this type of pattern, we're going to expect at least a pullback into the 154, 156 area. So we have very small risk for a heck of a lot of reward potential. If I have 60% accuracy on it and a good risk reward there, I'll go ahead and take it. Okay, and go after that. Confirmation that the tristar is reversing typically comes when the bottom of the third star is broken. So today's low of 160.78, okay, if that were to break, that would be confirmation of the tristar pattern. But again, you're dealing with kind of the same thing that you're dealing with any candlestick pattern of confirmation, which if you wait for confirmation, you have more risk and less reward. Or if you go after the pattern right away, you have more reward and less risk. Okay? So that confirmation, it costs, and you have to kind of decide, hey, do you want that cost here? So Goldman, as far as the setup here, just fantastic for this TriStar from a risk reward standpoint. I'm just kind of hoping the market holds on here at least for another 2 hours where it just kind of sits around where it is currently. We can go in to get into Goldman here for the TriStar for the candlestick pattern. The other thing, if we look at Goldman from an hourly standpoint, you'll see kind of the breakdown here today, the gap down, and now it's kind of rebounded right back towards the 7-hour moving average. So it's given a nice little downside entry even from an hourly perspective. Okay. So just setting up pretty nicely here with Goldman Sachs. Let's take a look at Bank of America. Okay, we don't have a TriStar pattern, do we? Okay, we don't really have a TriStar pattern, but what do we have? Okay, we have a bearish breakaway. Right, we have a bearish breakaway pattern. We've talked about these. Okay, these are accurate about 60% of the time, so kind of similar to the TriStar. Okay, so we have a bearish breakaway pattern going on with one stock in the group, TriStar going on with another stock in the group. Here's JP Morgan. Okay, we just had bearish patterns all over it. We had a little bit of a piercing line on Friday as the market pushed up Friday into the close. Okay. Citigroup here, hey, it had its bearish breakaway right back here, okay, and trading within that breakaway. If we just look at the XLF in general, okay, notice we do have a little bit of a TriStar forming over the last 3 days, but that's after selling going into it. Okay, so it's not really a reversal. This would be more of a continuation. So it's not really a TriStar. It's more of a bearish breakaway pattern that's going on here in the XLF. So we have a sector that in and of itself is breaking down a little bit, has some bearish undertones here. We have a stock that's got a nice little reversal pattern, bearish reversal pattern here at a retracement. Okay, and so my favorite one on the board from a candlestick standpoint here. Okay. Yeah, TMT, Tesla and Oxy setting up. Yeah, well, when I'm up in the middle of the night, 2, 3, 1 in the morning, and going through my charts, I take lots of notes. That way, I can kind of review them in the morning and remember. And one of my notes from last night said Tesla strong vibe bull trigger yesterday with nice stochastics. Love the stochastics action on it. The rolling off of the 20 here. We finally had a pullback here in Tesla. Had a nice breakup yesterday. Decent volume, RSI, everything we'd want to see. Okay. Then this morning it opened up $5 higher, and I said, ugh. I don't want to really chase Tesla with the market so toppy. So what I've done is I've said, okay, it's pulling back here today. It is coming back on a little more volume than I would like to see. Okay, but what I would be looking for is some sort of rebound where it would pull back, kind of rebound off the 7 with some little bullish engulfing or piercing line candle tomorrow or Thursday for that to kind of set up where Tesla, you can kind of see on the hourly, you see the big move up to 180 now pulling back, but where Tesla now starts to trade back above its 7-hour moving average. So I think there's some promise here for Tesla, that we are getting a setup starting to happen here in Tesla. But Tesla and Kihu to me are very similar. Both had strong bull vibe signals yesterday, and now it's just a matter of getting the better price. You see Kihu kind of trading flat here today, consolidating just a little bit, not nearly as much volume. Okay, so both of these kind of very similar. Just looking for a little strength to potentially come in on those around the 7-day moving average after the bullish triggers yesterday. I couldn't argue with somebody getting into Tesla or Kihu right here. Are you getting the best price? Maybe, but I do think you could get them just a little bit cheaper. Okay, but yes, are they setting up? Sure. Oxy here, OXY. Um, Oxy overall just doesn't follow patterns as well. It's a little choppier from a swing standpoint. If you've ever traded Oxy, it can be even these little candles. They look little, but they're really pretty big. We're talking about bigger swings and moves throughout the day. The Oxy, you'd think, okay, resistance up here above 98, but that didn't happen on major volume. I mean, it happened on a little bit of volume, so yeah, you could see the resistance there. But I would look at Oxy the same way as I look at Kihu or Tesla and say, all right, where's the best place to pick this up if it is going up, and I need to find a good risk reward point. For Oxy, you could get into it, use yesterday's open as a sell point or as a place to get out here for Oxy. And then if you look here from an hourly standpoint, you have the breakdown of the 7-hour. We really haven't been able to get back above it just yet. So I'd wait for this to potentially come back down to 96.5, 96, and then buy it on that next move above the 7-hour moving average. Okay, so all three of them kind of in a very similar state there, Oxy, Tesla, and Kihu. I mean, even for that matter, Costco, right? Which a beautiful trigger yesterday. Beautiful bullish trigger yesterday, breakout. Okay, nice breakout, but up at the upper band. Okay, where's the ideal place to get in? And kind of go into some of those hourlies and let them start to get back above the sevens on the hourlies. Okay? One of the things that's just concerning about today's market overall, and so far it's not materializing, but if we see a 3 or 4 point sell-off into the close, we will have the S&P with a fresh close back below the 7, kind of erasing yesterday's close above. But then we have all the various sectors that we looked at this morning that would be trading back below the 7. Okay. Now, so far, most of them are right on it. It can go either way. There's nothing magical about the 7. But if we get some sort of 5 to 7 to 10 point sell-off into the close today in the market, I think that would have very bearish implications for Wednesday and Thursday's trade, where things hold up here into the close. We see things like the XLI hold the 7s. We see Tesla kind of push back above its 7 into the close. We see a lot of these stocks that sold off early start to trade back above their 7 hours into the close. That has some pretty bullish implications, or I should say less bearish implications. It makes me more apt to say, hey, let me go after a Tesla, an Oxy, a Starbucks, a Costco, some of those nice names that are out there in trading nicely here today. Even something like a Google, where Google is overbought, right, because of these earnings, but there's been no real sell. Today is probably this morning is the most sell it's had in a while, and it's been met with some buying here. If the market itself holds up and Google itself closes near a high for the day above 1027, 1028, you even got Google where you're looking at probably a 10 to 15 point bounce, that next kind of surge after the nice earnings here. So, market holds up. There's several different directional trades that are definitely on the board out there. Alrighty, well, thanks for hopping on. Let me quickly go through our trades here. We had the XLE for the candlestick challenge. Got a nice little star here, our little harami action today. Again, we have bearish candles up at 87, bullish candles down at 86. It's going to resolve itself one way or the other. So far, volumes within the major components of the energy sector signal that we're likely to resolve to the downside. But okay, but so far, the longer we stay, the longer we consolidate, the more bullish it is. Okay? So if we see the XLE kind of even rally 30 to 40 cents into the close, may just take it off, lid fight another day and move on. ABX, which we also have for the candle challenge, which basically gapped down and destroyed us on Friday morning here. We have a little bit of value left in that. I may also look to just take that off and put that into the next candle trade here. And then TLT for the 100K challenge, ripped down to 105 here today and has come back pretty nicely ever since. It's a little overextended to the downside here. If this 105 can hold, we'd have some really nice action and see some buying happen ahead of the jobs report on Friday. I know there's a lot of worry in the headlines that taper is going to happen. I still am under the opinion that we will see no taper even in 2014. I don't think we see taper. I think there's a greater chance that we will actually see another policy rolled out than we will see taper. And if they do taper, I don't think they will do it without rolling out the other policy first. But again, that's an opinion there. But I don't see any incentive for the Fed to taper here at all. Okay, in fact, they have a lot of incentive not to taper, especially since the Fed said they didn't taper in September because they knew the budget battle was coming. Well, they know another budget battle is coming in the end of January. Now we're going to go through the same thing again end of January. Are they going to really taper ahead of that? No. So I think just some of this is a little bit of a corrective action here in the TLT, but I still think that the TLT has some really strong potential. Obviously, for the challenge, we needed to move sooner than later, but and probably is my last trade for that past challenge, and we'll start fresh here on November 15th, and start the brand new challenge here. Okay. Then we have SLV for the trend rider. Had a great trend rider signal. We talked about this on Thursday on that gap down. Now holding it for about 5 or 6 days is probably going to be pretty annoying, as it just probably isn't going to do anything. It's probably just going to drift lower to flat. But we're likely to get that nice little boost back up above the 7-day moving average. We do get that boost, I will look to add to the SLV. If we get that boost up above 2130, 2140, we'll absolutely look to add on that SLV, or even potentially in some of the other gold miners here with it. Okay. Alrighty. Well, we'll look at Goldman into the close. Carl has his top three that he'll be going through here with you today, and then we'll also look at some of these potential on the Google. We see kind of the bullish engulfing here on the Google, potentially playing that into tomorrow as well. Thanks for hopping on, and we'll talk to you later. Take care.